Hello again, Maverick traders, and welcome out to your currency recap. This is Ankit here, and we are on Tuesday, September the 12th. Let's take a quick look at what's happening the last 24 hours, and most importantly, talk about our upcoming 24 hours as we head into the US CPI. So in today's market recap, we'll be taking a look at market analysis, doing our, as usual, basket analysis, and taking a look at the best setups for the upcoming 24 hours. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So this is where we were yesterday. Markets were not doing a whole lot. We had a massive move in the crypto market, but outside of that, you can see everything was kind of sitting right in the middle from a -1 to a +1. So it hasn't really been a great opportunity so far. But again, something that we expected. We expect the markets to move off the CPI report. So let's just take a look at the numbers here and take a look at the percentage change in the currency market. You can see that it was not a big moving day. We want to see at least a 0.5% move to get us excited. And the best move we had today so far was the CAD. So surprisingly, CAD today was leading the US dollar, but overall, they sort of be moving pretty much in tandem with each other. But outside of that, you can see the pound was slightly weak. Aussie and Kiwi, little sort of differential there. So yen was down the most, 0.26%. So it was not a big exciting day. But our focus is now in next 24 hours. You can see that a day like today, we had a massive move in the crypto markets, up 5%. So after having a big fall yesterday, the crypto market just snapped right back up. So we are back in the range. Now the S&P and the World Stock Index down, the bonds were flat, gold is down, and oil is up. So there's a lot of hesitation as I was looking at broader tape that we are not seeing a whole lot of, movement ahead of that CPI report. So we'll see what happens. Taking a look at the crypto markets, Bitcoin Cash had the biggest move. But again, this is an oversold bounce. So we don't want to read too much into it. Crypto looks terrible. So we won't want to be selling these rallies instead of buying these these rallies. Now, let's go about the market outlook here. We are still sitting at a 0. If you take a look at the market scoring here, we look at the moving averages, we take a look at the slope, but right now, it's an indecision here. We talked about there's a lot of indecision in the market, so we have to really look at the next 24 to 48 hours. There's a lot of US data with the CPI and some other important data that we need to pay attention to. Now, looking at the broader schedule here, you can see that this morning we had the employment report out of the UK. It was actually 0.9 versus 17, so expectation was high. So, and the average earnings kind of kicked up as well. But again, overall, not a big impact on the pound. Pound is showing relative weakness now. Now, let's talk about an important next 24 hours. We had the GDP out of the UK in case you're trading the pound crosses. But we want to be in cash. We want to cash till tomorrow when we get this CPI report. The one thing to note is that this report is a lot different than before. Before, we were seeing a drop in numbers. This will be the first report. The headline will be that the CPI increased. And that's exactly what the expectation is. Going from 3.2 to 3.6 on year over year, 0.2 to 0.6 on month over month, and core is supposed to stay the same. So headline number is going to be, hey, the inflation picked up. But the question is, what kind of movement we get? There's a lot of movement that seems like it's already priced in with the bond market rallying into this. And we have the US dollar rallying for the last 6, 7, or 8 weeks. So this will be interesting to see if we see a continuation or we see reversal off of that. And then tomorrow evening, we have the Aussie employment report. So if you're trading the Aussie crosses, this would be a perfect moment to pair that up, especially if you're trading Aussie USD. I'll be looking at that trade. And don't forget, Thursday we have the ECB as well. So it's a lot of action-packed movement in the next 24 to 48 hours. This is why we've been mostly flat I like to stay flat until you start to get some data where there's a better probability, better reward to risk ratio on a lot of these trades. So let's do our quick currency analysis. Take a look at where is the velocity scores right now. Again, total opposite. Cryptos are now back up to a +3, and a lot of things are still kind of right in the middle. So we don't want to read too much into it. We know that tomorrow dollar is the one that we'll be focusing on. So let's quickly jump into TradingView and take a look at where we can find the next big move.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just start with a broader chart here. Let's take a look at this chart here. So let's just start with where we are in the equity markets. And we looked at the chart. We can see we had a negative day today, but the markets are really looking for where it wants to go, higher or lower. This is a sideways price action for now. Now, the dollar, actually, let's take a look at the bond yields first. Look what the bond yields are doing. And going into this, we have gained nicely into this. So the question is that, can we really run off of this, or is this already priced in? Now, take a look at the US dollar. US dollar had a massive run for the last 8 weeks. Can it go further higher, or do we want to sell on the news? Remember, we have this common phenomena where you get exactly what is expected, but we see a reversal on that news because that's where the price action is priced in, and we start to see a sort of a selling on the news. So the only scenario where we can see the dollar taking off, the market's dropping, is if the inflation report comes out hotter than expected. If it comes out in line with expectation, I think there's a lot is already priced in. So what you need to do tomorrow is you need to take a look at both the equity markets. This again comes out at 8:30 a.m. Eastern Standard Time, so you can kind of have a similar sort of a layout that I have here. You have the US 500 here. You have the US basket here. And then you have the bond markets here. So you can have those three and just see how things are moving. Remember, a lot of these things kind of move sort of in tandem here. We are seeing a nice correlation between the bond yields and the US dollar. So those are the things we need to sort of pay close attention to. Now, we talked about in the currency room how the dollar has been the one that's moving. So a lot of the other currencies have kind of gone sideways. Let's take a look at the daily chart on Kiwi. It's going sideways. Aussie going sideways. Canadian dollar again is trying to break out, but this is again tied to the US dollar. The British pound weakening. The euro kind of going sideways. Swiss franc going sideways to slightly lower. So a lot of these currencies are kind of doing the same thing. And again, if you're trying to find a breakout, you need to find a breakout in these currency baskets. I'm not seeing any breakout as of yet. So as we go into tomorrow, we are going to get either a strong dollar or weak dollar. And as a trader, we need to be prepared for both case scenario. I just want to point that out, that dollar has been in a nice strong uptrend. So this trend has been really strong. So trying to short the dollar here could be a counter trend trade. As if you take a look at the daily chart, it looks like a counter trend trade. If you look at these exponential moving average, we haven't really broken this exponential moving average. So overall, it's still supported by that. So it doesn't look ripe for a USD short. And even though if you're looking at a short side, you just have to be very careful. So as a trader, we need to prepare for ourselves for both case scenario. What if the dollar is strong? What if the dollar is weak? So we can kind of make this simple here and take a look at what currency pairs we like the best or the worst. Again, I don't want to go with the dollar CAD because it says tied up. So we can go with pretty much any currency pair and we'll probably get the same sort of reaction to it. everything on the daily chart. You can see right now, if you want to go for a breakout, I would like to see this previous below or the support to break here. There's nothing in the chart that's telling you on the daily, hey, I should be buying this here. So if you're going for a reversal, you have to go on a shorter term time frame, maybe a 15-minute chart to an hourly chart. But right now, if you look at these charts, they look very messy here. But we can draw some lines here and say, well, if it breaks this line, I want to be a buyer. So Aussie USD, it has to be above the 64. 48 or 64.50 area, and our support has to be right below it at about 64.10. So you have to give your trade a little bit of room. Start with a half a position size and go a little bit higher from there. Again, I have no idea which way the support's going to come out, but either or, we probably get a big move, especially on a big miss, or if this is already priced in. You got to remember that a lot of these things kind of look a little oversold on the RSI. It might catch a little bit of bounce on Euro USD. We have a nice support right at about 106.83. So if I want to be going long the Euro Aussie, this is a support level. So if you're playing these levels, you have to kind of understand that these are the levels that we can put our stop at and then see if we can catch a bigger move off of it. One thing we don't want to do is get caught up in the volatility where there's an indecision. It doesn't know where it's going to go. So tomorrow we'll see which currency actually is doing the best or the worst. Again, technically, they all kind of look very similar. Aussie USD, Kiwi USD, dollar Swiss franc. Look at that. Like they all kind of looks very similar because the dollar has been gaining. Everything kind of looks good across the board. So on the long side, let's say if the dollar comes out strong, one currency that I do like is the dollar yen. Dollar yen is great to trade around these news events. But if you look at the daily chart, we got the highs at 148. It's sitting at 147. Now, if I bring it lower time frame, this is where probably get a wide range to kind of deal with. But let's say if you're trading on a 15-minute chart per se, just make sure you have your stops in place either at a previous high or a new low. These are the levels we want to see it break. But if it stays in the middle, then that's where we get a little bit of volatility. So, like I said, you can look at pretty much anything across the board. I won't be surprised either dollar is up 1% tomorrow or is down 1%. Pay attention to bond markets too. Like I said, right now, going into this report, we are not seeing things kind of backing off, which means that we probably see a bigger move off the news. Look at the bond market today, or in the last hourly chart. The bond market isn't really going anywhere, which means that it's waiting for the next shoe to drop. It's sitting at the highs here. So again, this kind of makes me nervous that we are at the highs. If a strong CPI can really push things higher. So on the other hand, if it comes out weaker than expected or in line with expectation, I will be hesitating to buy the dollar because I think the price or the move is already priced in. So be careful with this news event tomorrow. But don't forget that it's just not that report. On tomorrow night, we have the Aussie employment report. On Thursday, we have the ECB. I know a lot of times we want to get in the initial price action, but I think whatever happens tomorrow will set the tone for some of the currency for the rest of the week. So stay disciplined, stay in cash tonight. No rush to make trades. Trade when there's an opportunity, when there's an energy in the markets. That's where you can get a good reward risk ratio on the trades. Thanks, everyone. We'll see you guys tomorrow. Cheers.